Hi, and welcome to Weiss Ratings Behind the Screens. I'm Senior Financial Analyst Gavin Magor, and I'm going to be your host today. Now, the other day we were asking about American mutual funds, investing in America, and you said to us, how did you do that? So we thought we'd put together this little video to show you exactly what we do to put a mutual fund screener together. So what we're going to do first of all is to go to our mutual funds, go to the screener, very easy, and we're going to start to add our criteria, okay? Now, the first thing I'm going to do here is to add the Weiss rating. I always put these Weiss ratings in the screeners because it allows me afterwards to just fiddle with whether I'm wanting to look at the buys in the A to B range, the holds in the C range, or even looking at the sells. There's value in all of those. So what we're going to do now is to rename this All American. So you see what we're going to do there, and I'm going to click on Save so that we've saved this screener. And then I'm going to start adding the rest of the criteria. So the first criteria I'm going to look at is returns. The total returns here are real important for us. So we go down to Performance, and then we're going to look here at total returns. And normally you'd be looking at maybe something in the last 3 months, 6 months, 9 months, but we're talking about mutual funds here. And we're looking at a time horizon of at least 18 months to 2 years for your investment. So what we want to know is, have these funds given us a return over a consistent period and given you money that you're going to be able to keep safely? So what we want to do here is put in the 1-year return, and we're going to add a 3-year return as well. So we're going to look at the performance there. We just click back into the same area and add in the 3-year period. And because we're not content with that, we're going to add 5 years as well. So ultimately, we're going to be looking for returns over 1 year, 3 year, and 5 year that give us the returns that we're looking for. So when we look at this, we're going to have some numbers that we're going to then have to put in later. These numbers here currently just represent the ranges. So you've got from minus 65% to 182% over the last year. That's just the total range of all of the mutual funds. So we're then going to add another criteria, which is going to be whether or not the investment that you're wanting to make is actually open for investment. So, of course, there's no point in having a mutual fund that looks great, but you can't put your money into it. So we're going to go for the open ones. And having done that, we want to look at the expenses. So in the operating ratios area down here, we're going to see what the expenses are. That this is the fund's fees, essentially, that you're being charged for running your account. And as you can see here, the expense ratios range from 0 to 19%, or over 19%. 19% on your fund. So if you've got $100 in there, they're going to be charging you $19 in fees. Now, you've got to get a heck of a return to make some money on that. So you're probably going to want to avoid that, and we'll get to that in a second. Now we're going to look at the minimum investments for the fund, okay? So when we're looking at this, we're saying how much have you got to put in when you open up the account, how much have you got to have to hand. Now here, I believe this number is like $1 billion. That seems crazy because I don't know about you, but I don't have $1 billion, so I'm not going to be able to put that in. But you, like me, may have access to something like $10,000. Now, this is the maximum, remember. This is not the minimum. So you could have a 0, but what we're saying is we're going to restrict the maximum that you've got to put in to start with to $10,000, okay? And then we're going to have the total assets. We're going to look at the balance sheet here, and we're going to say, well, we want to have a fund that's got at least something behind it. And if you remember that $1 billion, what I'm probably going to do here is to say, well, the asset minimum that we've got to have in there is going to be $1 billion. So let's put that in right this second, and that'll narrow things down a fair bit. So we're saying this fund has got some money behind it. It's not just you investing, unless you've got the $1 billion to start with, in which case you're probably not subscribing to this channel. Anyway, the next thing we're going to look at is the critical one. It's the asset allocation. So what we're going to do here is to do something that sounds a little crazy. We're going to pull out the non-US bonds, and we're going to pull out the non-US stocks. Now, I'll explain this to you, but it's real simple. we don't know what else they might be investing in. They may have some cash. And we want to eliminate the risk that we're going to miss something like that. What we do know is that we don't want it to have any non-US bonds or non-US stocks. So we're going to put in here 0, okay? So when we put in the 0 here, we're also going to put in a 0 at the other end so that we can guarantee that there are going to be no non-US bonds. And we do the same for the non-US stocks, okay? We're going to put a 0 in there and a 0 up here. And hit enter. So there you've got your non-US bonds, non-US stocks in that situation. Now, we haven't looked at all the criteria and put in things like the returns yet, but let's take a look and see what numbers we're talking about down here. If we scroll to the bottom, and we're talking about a total number of funds of 867. Well, that's a lot of funds. I can't sort of compute in my head what makes a good fund and what makes a bad fund from 800 odd funds. So we've got to narrow that down quite considerably. What I'm going to do first of all is to save my screener, and then I'm going to start to look at these return areas. Now, unless you happen to be really into funds, you're not going to know what sort of returns you're going to expect. So this can be applied to any of our screeners, but if you want to have a look and find out what the average fund is doing, you can just pick a fund at random, really. I mean, let's just go into this one. I don't know what's going to happen when I do it, but let's have a look. We're going to go to the industry comparison, and in here you can see the performances, okay? And we're looking for the returns here over the last 1 year, 3 year, and 5 year periods. Now, this particular one doesn't look all that great, so what we're going to do here is to identify what the medians are. And we're looking at an average here of minus 1.5% over a year. So the average mutual fund has returned a negative 1.5%, okay? Over 3 years, that average is 16.57%, and over 5 years, the average is 32%, okay? So I'm going to try and remember those numbers, and I'm going to go back to where I was before. Now, hopefully I saved it right, and we'll be able to get right back to it. So I'm going to click back up here on the top, go to the mutual fund screener, and click on my All-American. Okay, so here we are. The screener's come up, and we're going to add in those numbers that we were talking about. Except for, I don't like that average, a 1 year return of a minus number. I don't think that that's necessary. I think we can at least put, over the last 12 months, put a 0%. We shouldn't be aiming for mediocrity here. And then we've got to put in here the 3 year return, which I think was 16.57%, if I recall correctly. It's been a while since we looked at the number. And then for the 5 years, the minimum return I wanted to see was 32%. So what we've done here is to enter in the numbers that will give us returns for funds that have a better than average 1 year return, at least a minimum of the average for a 3 year return, and at the same time, at least meeting the average return for 5 years. So overall, you should be looking at a limited number of funds who are giving you all of those checks in the right box, okay? So let's go through the rest of these here. What we've got is our open fund and an expense ratio. Now, expense ratios are an area where we're saying we don't want to be paying too much, and 0% to 19%, that's ridiculous. So, of course, we want to have something as close to 0 as we can, but we don't know what a reasonable number is other than what's in my head. So let's see what there is as an average, and we'll come back to it, okay? So I'm going to save the All-American Fund again, and we're going to go back down here, and we'll pick on a fund, and let's come and look at the average data again. So looking at the industry comparison, we scroll down, and we're going to get down to the area where we have expense ratios. And the expense ratio, the average, is 1.19%, okay? You see that there? Okay, we're going to come back out, and we're going to go back to the mutual funds and go back to the screener with that 1.19% in our heads, and click on my screen. And here we go. We've got the minimum expense ratio here of 0 and 19.05%. Well, we came up with a 1.19 average. That seems to me really to be a little high. So I'm going to put in here 0.25, just because I don't think you should be paying so much of your hard-earned cash out to somebody who's sitting there in a suit and tie, just basically robbing you. Well, they wouldn't put it that way, but I'm going to. Anyways, let's have a look here. We've got a minimum investment of 0 up to 10,000. We have total assets of $1 billion as a minimum, and we're saying that none of these funds are going to have any investments outside of the US. Okay, so let's scroll down and see what sort of results we have on this. Okay, here we go. We've got 12 funds. You see here, 12 funds, including a C-rated fund, which is a hold. And let's see if what else we've got in here. Let's reduce these funds down to those that are a buy. So we're only looking at buy-rated funds, and that reduces it down to 10. Now, as you can see here, there's many different funds. We've got muni bonds, we've got real estate investments, got long-term treasuries, you've got some high-yield tax-exempt bonds. So there's a number of different investments that you could make, and they range really across the line in their returns as well. So let's click on the 5-year total return and sort that by largest to smallest. You can reverse the large to small, small to large by just clicking on it again. And you can see here that the largest return is for this Fidelity Series 100 Index Fund at 104.02%, which over 5 years is one heck of a return. And you can see the lowest of these funds was 35%. Not a bad return. So you can sort these numbers any which way you like. You can scroll across here and look at the expense ratios, and you can see just at a glance that these expense ratios range from 0%, you've got 0.12%, you've got 0.05%, you've got 0.2%. All of these funds meet the criteria we had. Some of them have got 0 minimum investments. They've got great expense ratios, total assets, even as high as $67.3 billion in that fund. So there's really a lot of backing for your investments here. Remember, all of these things you can change, okay? We're not telling you how to do this. You're in control. You can decide whether to add, delete, or amend any of the criteria that I've used to do this for you today to give you your all-American mutual funds. Thanks for joining me, Gavin Magor, at WeissRatings.com, empowering you with investment confidence. From me, at Weiss Ratings, until next time, cheers!